Good morning. This is Josh Hayes with Hedge Plus, and here is the market monitor for Thursday, August 28th. Well, without any fresh news or new market data to digest, no major changes to the marketplace. We're back in that pattern of slowly drifting down. I believe yesterday was the day last year where corn bottomed out. There'd be hope that perhaps we'd start to settle in here soon and start to bounce off a low. But really, all the markets trading on right now is, again, the expectation of a big crop. There's definitely good demand there. We've continued to have strong sales. We'll have the export sales report today. No reason to think that we've slowed down. Our prices have been the lowest for quite some time. There are definitely things going on in the background, such as word that Vietnam is planning to move entirely to ethanol blend gasoline, and they're doing that so that they can increase their imports of U.S. corn and ethanol. That's obviously helpful. EU is doing something similar. They're rapidly trying to get tariffs removed on a lot of U.S. products, specifically agricultural goods, including soybeans and grains. All these things, whether we get surpassed and prices get lower elsewhere, these bode well for that demand being maintained. But obviously, production, and it seems as though yield estimates are again on the rise. Of course, we had the USDA August report first, and then we had the crop tour, which showed a significant departure from those high numbers. Well, now more numbers are coming out, more tours, more assessments, more projections, and it seems like we're drifting back up again. So right now you have, again, no doubts about production, expecting a high number, such a large number that the question is, will we have any kind of a tight situation at the end of the year? We'd have to maintain this demand pace. Will we? Weather is getting better. We are starting to get some rain in some places that were dry. That's boosted the outlook for both corn and soybeans. And then around the world, the wheat production forecasts all yesterday, seeing that production forecasts increased in Russia, Australia, and Canada. So it was starting to be a little bit different picture for wheat, a little bit tighter supply than originally expected. That changes when these production numbers are raised because the demand for wheat has not really changed. The demand has been lukewarm around the world globally, and without a boost there to match these increased production numbers, and like I said, Russia, Australia, and Canada, and elsewhere, that's going to weigh on wheat prices and the wheat market as a whole. And then with soybeans, there's definitely building doubt that the exemptions granted for processing bean oil to small refineries, there is definitely a question. We're kind of hanging in the air right now. Will they get that reallocated to some of the larger processors to ensure that we have the same growth, I guess, with soybean oil production and processing of soybeans? So that brings into question some of the demand for soybeans as well. So I definitely do think the demand's going to be there. I think these trade deals are going to, you see examples of what's going on, what's coming, but the market's not going to react to those things until those purchases actually take place, and then they take a big chunk out of production. So that's a spring thing. That's an end of year, see where we're at. What kind of crop did we get, and how much of it did we move? And so it's going to take some time for that to happen. Of course, we also have China. Yesterday on this same graphic, I noted that China is not only sending their top negotiator here right now, kind of the negotiator you'd bring in at the end when you're finalizing a deal. I think everyone kind of anticipates a deal when by the time Xi and Trump meet here in October or November. but this person's also saying the right things. We know that Trump has been calling for China to buy soybeans. This top negotiator from China, it was out there publicly saying that the U.S. has a great agricultural product. It's a product they want. And in return, he mentioned some agricultural machinery that they'd want to sell us. But they're talking about the right things, and they're specifically talking about U.S. agriculture, about soybeans, and to be honest with you, also their actions match up. They're going to need more soybeans than what they can get from Brazil. So they're really what they're doing is they're setting up a very easy scenario for them where they're going to agree to buy something they need anyway, and they've definitely held that in their back pocket, withhold buying our soybeans as to gain leverage, and then it's an easy thing to say yes to, um, presuming the U.S. makes some concessions on our ends and agrees to make some purchases for them. So I think the writing's on the wall. The deal's going to happen. It's going to include agricultural products. It's going to include soybeans. But we have to wait. We have to wait until that actually happens. So in the meantime, the market focuses on large production, record crops, and it seems like again that yields are again on the rise with in terms of projections. Taking a look at weather, again, nothing too major. I'd say the most concerning issue anywhere right now that's been going on the longest is the dryness in the Black Sea region, southern Russia, parts of Ukraine. There's also has been dryness in Western Europe that has already impacted France's crops, and it led to most likely an increase of their import, and that includes corn. They'll probably need to import a lot more corn than they originally expected. But that dryness is definitely building, and Russia has not yet um, led to any massive projections reductions, but it's been there around for a while, and they are not expected to see rain anytime soon, and in fact they're expected now heat up a little bit as well. Heavy rain coming for Argentina, which needs it for their wheat crop, so that's beneficial there. And the U.S. Cooler and dry, uh, basically from west to east, but there has been some rain lately in some places that needed it. And then with soybeans, there's obviously been some places that have been a little too wet. So a break from the rain and cooler weather is definitely welcome. Taking a look at international prices, definitely like to be able to do this every Thursday. You see, the gaps are narrowing. In fact, we no longer are putting the cheapest wheat on the market. You see, there's Black Sea, that's basically Ukraine, has gotten below us. Baltic states have gotten below us. Russia is almost caught up to us. You wonder where price pressure is coming for wheat. There you go. I mean, we now have competition going forward. It took a while. Russia took some time to get their wheat to market, but that is all taking place right now. And without any significant sources of demand boost, that's definitely going to weigh on the wheat market going forward. And then as far as corn and soybeans, Argentina is now about $4 less per metric ton than us with corn. We do still have the lowest priced soybeans. Normally, you'd think we'd have a massive uptick in sales like we have had for corn and wheat, but obviously, with China buying from Brazil, regardless of the higher price, the impact has been dulled a little bit there with soybeans, but we'll enjoy a little bit longer period where we should have a price advantage. These prices are all the way priced out to November, December. So there's talk that we will have this price advantage with beans for a while. But as you can see now, Argentina has dipped below us, and Brazil is within $4 with us on corn. So some of that competitive advantage we've held will probably show up in the form of a little bit of a reduction in export sales. Still very competitive. We still have the great quality, so no reason to think sales are going to fall off the cliff, but we just might not have some of these eye-popping numbers we've had recently going forward. Taking a look at overnight prices, pretty inactive, pretty neutral overnight. Corn up just a half a cent. Beans and wheat down about a penny. But always like to make this relative. So when I look back to where we were this time Tuesday, about 48 hours ago, since then, down across the board, corn down around 7 cents, soybeans down around 6 cents, and wheat down around 8 cents. That's that slow drift down we're talking about. That's why we haven't yet initiated buybacks, especially with corn. It's why we have to keep an eye of potentially drifting back down to $4, if not below, especially as we move closer toward harvest and probably well into that time period with harvest. So it's one of the things that's happened this year. It appears to be a little bit of a shift in timeline. Remains to be seen. Like I said earlier, corn bottomed out, I believe it was yesterday, last year, if not a Tuesday. But this is around the time we bottomed out with corn last week. Perhaps we'll repeat that, though that is not our expectation. That will be all for today. We got the feedlot focus tomorrow with Jason talking about cattle and hog markets. Next week, with Labor Day holiday and some vacations here at Hedge Plus, there will be no market monitor next week, but we will have our other three primary videos. We will have Pat's Commodity Compass, his general look on the corn and soybean markets. That'll come on Wednesday next week. On Thursday next week, we'll have the Grain Gauntlet. That's our weekly Q&A. And then, as usual, on Friday next week, we'll have Jason's Feedlot Focus. That's all, and I hope everyone has a great day.